And we are live. Good morning to everybody. And we are live on Tuesday's edition of Behind the Markets. Welcome to this edition, which is your personal finance edition. And we will be continuing in the post debt world of Zambia. Good morning to you, Vernon. And how are you doing, my brother?
Doing great, thank you. How is your morning as well as today?
It is good. It's good. It is good. It is great. And for the purpose of getting through quite a bit, we've got quite a lot to talk about today. We've got a deep dive, which is getting into some of the latter details that are picking up on the debt itself. We've got some conversations to talk about. One question I really want to stick out to the crowd today, to anybody who's watching today. I want to just give you what I've got as my question of the day. It's my personal finance question of the day. And finally, Brennan, we're going to talk about health insurance. It's not the coolest topic on the planet, but it is one of the most important things that we all need to work on. But welcome to Behind the Markets to everybody who is joining us. And let's get into our daily roundup. In the market roundup today, we did see that the Kwacha has now started to reverse its trajectory. We're starting to see a reverse as we saw it bottom out yesterday at 17.09. Now it's come back up to 17.15. And in fact, it closed yesterday at 17.2. That was the average that we were picking up in terms of the monthly. That was the monthly average that we were. Sorry, that was the 17.1551 is the average for yesterday. But if we're looking very carefully, we will actually start to see that this is the true average going forward. Now, one of the things that we are starting to pick up today. Some of the things I also started to pick up yesterday, we did see the stock market move into the positive area yesterday as well. A little bit of movement in Standard Chartered shares as of yesterday. We also did see that interest rates also came down yesterday as well. We did see that interest rates also came down as of yesterday. In fact, it went up as of yesterday. Sorry, Evan, I think we have a little bit of feedback here. But we did see that interest rates also came up yesterday, up by 0.06%. That was quite important for all of us yesterday to actually see that. Now, one of the things that we actually are starting to look at also is that the RAND also is still trading at about 0.9233. 0.9% up yesterday. So the dollar up 0.49%. So this is actually quite interesting information that we're seeing that the cross-border trading community will probably have a little bit of a struggle as well when it comes to all of this. Now, we did see that GRZ bonds also moved down by 0.01%. That's one of the first days we've actually seen a negative movement. And we also, the USD version also moved down by 0.04% after a strong rally. But we did see interest rates move up 24.14%. We were actually been expecting them to start moving downwards, but they've also already started moving upwards. So this is a little bit of some market confusion still happening. Something that we should expect to still occur, but there's still going to be some bugs and kinks in the system until we probably get a full flood of capital coming in. But for now, we have got a positive sentiment, but it has not fully reflected yet in the system. Now, the commodities, in the terms of commodities market, we did see that copper stayed pretty much similar. It's up 0.03% as of yesterday, while oil jumped back up a little bit, back up to 0.37%. I'm sorry. 0.37% up to 74.11, while gold also moved up 0.28% in dollars. Moving on to the wealth insurance assets, we did see that crypto Bitcoin was down 0.3% yesterday, while Ethereum up 0.5%, gold in Kwacha up 0.77%. And we are seeing a little bit of this kind of restructuring and reframing happening around the various parts of our market. Now, we did see yesterday, we did see that bonds have now crossed over into 13% year to date, while stocks are still at about 12% year to date. So halfway through the year, the bond index has traded about 13% year to date, actually showing a little bit of strength there, while stocks are up 12.3% year to date, heading towards on the march towards a 25% year. And if we keep interest rates, so if inflation stays below 10%, we're looking at a 15% above inflation year. While the USD is down 5.2%, gold is up 0.4%, and Ethereum and Bitcoin are still the key performers. Bitcoin, because of that 30,000 margin, because of that the BlackRock filing for their Bitcoin spot ETF. So that's been the major news that we've seen. Now, we're also going to pick up very quickly on our Sorry, pick up very quickly on our expectations for oil. Now, we have seen that the fuel pump price is expected to either move up about 14 where or not at all. It is within that 2% range, 2.5% range, where we're probably expecting the prices to stay the same. If they move up no more than a kwacha, probably. That is our expectation, as we've seen from the price movements recently. And this has got to do with the crude price movements and the general price movements. But in general, we're not seeing much that's pushing the price of oil upwards too much. We have had a weak FX month until this last bit of news where we finally got a change due to our debt deal. But for the majority of the month, we had a very weak currency that was pushing the FX rate in the negative. And in terms of our four horsemen, what did we see yesterday? We did see that Kenya raised its interest rates 1% to 10.5%. US short-term notes auctioned higher, showing that there's still the appetite for higher interest rates from the Western investors. So we kind of expect them to come in pushing our interest rates down instantly. Canadian wholesales tick positives, tick into the positive. German expectations and business climate continue to go weaker, while Canadian manufacturing also ticks positive. Not much news that came out yesterday, as it was a Monday, but we did see a little bit of strong industrial news. But interest rates are still elevated. Inflation is still a bit sticky around the world. So this is where the problem is. We can't expect developed nations to keep bringing down their interest rates going forward. Now, let's take into consideration very quickly now as we get into our deep dive for the day. And our deep dive for the day as of yesterday. So, and our deep dive for the day as of yesterday is got to be the first story that we have touched on. So that we're going to touch on is actually the story that came out regarding some of the deals to do with our interest rates. Now, apparently, as it comes out yesterday, and these are not all totally confirmed, Zambia is to pay 1% after the Mission Impossible debt deal. And basically, interest rates will rise after 14 years to 2.5%. The deal set the precedent for other nations with unaffordable debt. So the bilateral debt that we've been working with was actually contracting about 4% interest, and we're expected to be paying 1% interest on that now for the first 3 months of the year. For the first 3 years of this 20-year cycle where we've stretched out the debt, what we've actually found is that we're going to probably see our debt. We're probably going to see only interest payments. So only that 1% is probably going to be paid. So we wanted to do a few projections as to what that means to government budgets. So if you take a look and what that would mean to the FX rate, if you take a look at the bilateral debt, we're probably going to be paying somewhere around $63 million a year for the first year of the debt payment, first 3 years of debt payments. That is well within the Zambian people's budget or the Zambian government's budget in terms of being able to pay back. Now, the second string is going to be somewhere between year 4 to 20, where now our government has to come up with about $420 million a year. Now, currently, the government is making about $1.2 billion in mining tax revenue. When you look at that, the expectations for this year, somewhere around that whole 1.2 billion or somewhere around 700 million. That's the expectation that we're looking at. Somewhere around the ring of 700 to 1.2 billion in mining tax revenue is what the expectations are. Now, currently, we've had a very poor quarter one in terms of mineral tax royalties and mining tax revenue. Only made about $180 million in quarter one of this year. So therefore, that stretching out probably looks like we might make about 720 to 800, but upside of it 1.2 billion. That's where I've kind of capped it at, as to 1.2 billion. So already now, that would be a very strained position for us in terms of our forex. Because remember, what we're trying to do is rebuild our forex reserves. And so one of the things we'll have to start doing as a country is to then start taking those forex reserves and then converting them into business activity, converting those into payments. So remember, people, when you're dealing with debt repayments, the number one tool to getting rid of your debt is your revenue, not accessing more debt. Okay? Now, yes, we've had to access debt. We've had to access all sorts of payments. So when you look at this, if let's assume the Eurobond creditors agree to the same, if not similar terms. Let's assume they agree to the same, if not similar terms. one of the things that we probably are likely to or then find out is then you double these kinds of payments. And then also remember, you got payments to the IMF that you have to make for that 1.3 billion that we're going to complete borrowing. Remember, we've got 5 years where we're not paying it back. Then after that, we've got to start paying it back for the next 10 years after that. So for these next 20 years, we're going to be repaying back the IMF. We're going to be repaying back the Eurobond creditors, and we're going to be repaying back the bilateral creditors over the next 20 years. So we have 20 years to make these payments work. So if we've been given a 3-year grace period, then what we've got to do in that 3-year grace period, where we've been given only payments of about $63 million, which is about 1.2 billion kwacha max, you're really looking at somewhere to about 1 to 1.2 billion kwacha. If we're going to make the best of this, we have to make sure that we ramp up the things that make dollars. So that's why there's going to be a lot of investment in stimulating export, trying to get as much export going, and specifically mineral export. Okay, so this is why there has to be stimulation of the output when it comes to mines. And the only problem we've been having is that the mines are holding back output generally because they're trying to make sure that they don't get caught on the wrong side of all of this. The mining sector does not want to make its usual mistake of oversupplying the market in the situation where they end up now with a bad price and maybe their profitability issues. So what you're probably finding is they're going to start waiting for that 2025 period. So at least the grace period that we've been given is enough to wait until the expectations of a stronger copper price somewhere in 2025. Now, obviously, we're still waiting to see if the Eurobond creditors are going to give us are going to accept a similar deal, or we're going to have a similar deal from them. I know that there's talks that they have, but they haven't agreed to it yet. And once they restructure, then we can start to reprofile as well. So all of this together might have to get worked on. Now, like I said, that 1% interest rate will put us somewhere around $420 million a year. And if you double that, then you're getting somewhere around 840. If we get the same deal, you're getting somewhere around 840, probably about 500 something million dollars. If you're dealing with the Eurobond creditors as well, then you're paying the IMF. This country is going to have about $1 billion worth of dollars coming in to be able to now offload into the market. Now, why is that important? If the government has to keep making debt payments and they've got specific things they need to purchase, remember, the government has to acquire dollars. Now, the best thing for us is if those dollars come from the mining sector directly into the government's account without the government having to go onto the market to buy dollars. This is what we're trying to avoid. The kwacha gets stronger if the government does not have to get onto the market to buy dollars. If they have to get onto the market to start buying dollars from the banking sector and generally from the economy, then the kwacha gets weaker. Okay, because then they're going to be vacuuming dollars out of the system as opposed to using their own stock of dollars to then repay. So I think this is the main thing that we're trying to do, and we're still trying to do a net building of our forex reserves. That is one of the things we're also trying to do to make sure that we can also cover 3 to 6 months of imports. I want you to think about the 3 to 6 months of imports the same way we think about 3 to 6 months of expenses is what you should be having in cash for you to be financially secure. If you got 3 to 6 months of your total expenses that you have in cash, you're secure. A nation is the similar way as well. So why are we pushing for things like 2 million tons? Let me show you the implications of the 2 million ton and the $10,000 copper mark. And the reason is we're expecting copper to be somewhere between $10,000 to $15,000 coming 2025 onwards due to the impending deficits that are coming. So if, let's say, we hit 2 million tons of copper, okay, right now we're barely scratching 1. But if we actually manage to get to 2 million tons of copper at a $10,000 price, then the expected revenue towards the government in terms of both mining tax and mineral royalties can be about 3.2 billion. They can manage then to make all these payments, IMF, creditors, everyone, they can manage this. Okay, and therefore there's enough to also build up reserves in the country, to build up dollar reserves in the country. Obviously, they have to pay for medicine. That's another issue for them as well. And remember, by this point, they stopped buying fertilizer. So there's no pressure for dollars from fertilizer 2025. That's the name of the game. And by 2026 to 2029, they're spending less on trying to bring oil into the country. So if we can try and get this system operating a little bit more efficiently, then some of these government taxes, some of the taxes that we're seeing will be sufficient enough to cover the outflows from debt repayments and still have enough to build up a strong reserve as a nation. That's good news. Okay, that's actually good news if we can do that. So this is why it's important. In fact, it's imperative that instead of trying to borrow our way out of this and restructure our way out of this, which we've done so far, this is the good part, we now need to trade our way out of this. And so it's about ramping up copper production to 2 million. Let's take a look at what happens if we hit the 3 million target. Well, the 3 million target means that mineral royalties and mineral taxes can potentially be about $5 billion. That's a huge change, by the way. Then that's a government that's able to finance a lot more just on that kind of thing. So they're trying to get the quantums of copper up. Now, the quantums of copper will come up mainly when that price hits that mark. And the reason is I think the mining companies are waiting for the EV cycle to truly kick in and the smelter capacity in China, India, and Indonesia to also ramp up so that they can start increasing their output as well. So these are the two main cases that we're trying to make here. But remember, as we pointed out yesterday from the interview with the CEO of Glencore, that there is a push. There is an increase, the increase of green energy. One, trying to replace fossil fuels will lead to an increase of the needs for solar and wind, which require more copper. The EV, the electric vehicles also, and also the electrification of new people. Remember that there's still 800 million people on this earth who do not have electricity. 2.6 billion people on this earth who do not have access to what is deemed clean cooking. So they have to cut trees down just to cook food. So if you can deal with the energy needs of these people, and that is what you're going to try and need to deal with as well. So I think that's the core conversation we're trying to have here, where copper is expected to ramp up. We're also trying to get alternative metals, whether it's our nickel and manganese, to also start bringing in more revenue. So that's also part of the 8th development plan to do that. So that also has to be monitored. This is part of making our debt sustainable so that the royalties from these also flow through, and also the taxes that we're able to get can flow through, and we can pay off we can make sure that we're on track with our debt payments. And finally, we can also try and get agricultural export. Remember, we're trying to get agricultural export up to $2 billion by 2026. We're on track this year to get to $1 billion of agricultural export. The expectation is to try and get to $2 billion by 2026 to try and press that further, so that agricultural export plus mineral export, and then the taxes and dues that are able to be raised from those two, can then start channeling into debt repayments, so that the government does not have to start looking for dollars from the market, and therefore the import-export flows of the country can manage themselves with surplus of dollars generally, and therefore the BOZ and the general government can stay out of the market and just utilize tax revenue to then go in. Now, it also requires that we also reindustrialize our country to produce as much domestically to avoid fast-growing imports, because right now we still have an import-export lopsided situation where we can actually have a weakness of the kwacha because we're importing too much outside of the mining industry. So we need to also make sure of that. The other risk, I think, to all of this is also healthcare. Medicine has been one of our biggest pressure points on our FX rate because the higher cost of medicine out there, and this is why we had to have that conversation about production of medicine domestically. These are key risks. The cost of medicine that we have to buy to bring in and fully stock our medicine to be able to deliver on healthcare services, especially the more and more people we have on things like NEMA now. That's actually also creating a lot of pressure to make sure that we have fully stored, and that's also creating a lot of pressure on the FX rate. So we have to kind of fix medicine, oil, and make sure that our minerals. So there's a lot happening here. There's a lot of spinning plates that have to kind of line up. But this is based on the main story today, where we actually are going through the first conversation about Zambia's interest payments and the profile, and we're still waiting for that. Other news that has kicked in yesterday was that the Pensions and Insurance Authority seeks a legal amendment to accommodate informally employed. The amendment seeks to open up the individual retirement accounts market to informal operators such as gig workers, entrepreneurs, marketeers, and bus drivers. Pension market currently operates a three-level pension system, which is NAPSA, your employer pension, and your personal savings. But the law does not support those who are self-employed, those who are gig employed. There is no provisions for you to start getting into a pension fund. Now, remember, the US has a system where you can have an individual retirement account. It's called an IRA or a Roth IRA to some people as well. And some of these things are also tax deductible, they're tax friendly. So if there's a way to also allow the self-employed, remember that almost half of this country, in terms of the labor force, I'm not talking about the total country, I'm just talking about the labor force. Almost half of the people here are self-employed. Okay, even the people who come out of school, out of university, they're self-employed too. So the reality is, how are we accommodating for an individual to be able to now set up their own pension account for their retirement? Are we allowing them to set up their own pension account for the retirement? What are the legal prescriptions for that? So that's a conversation that was being had as of yesterday to see what amendments can be made to the act to try and support the individual retirement accounts as well. Then again, we're not even getting people to contribute to NAPSA fully. Remember that formally employed people, out of the 960,000 people who contribute to NAPSA, 950,000 of them are formally employed. So we're barely scratching the surface of the informal sector just to contribute to NAPSA, let alone to their own retirement plan. But one of the reasons why this is also a needed conversation is because a lot of self-employed people find themselves in horrible situations when they are in retirement. But it's also true for the people who have also been working as well, but they have a little bit of a cushion. Now, the self-employed also need to start structuring. Just because you have employed yourself, there's a tendency to constantly throw money back into your business and economic activity. You do need to do that, but you also need to build wealth outside of that, because you cannot stockpile all your wealth and your well-being in one economic engine. That you're making your life no different to a person who is relying on their job, and when their job gets taken, their lifestyle vanishes. That's a very dangerous situation. So you want to avoid always saying, no, all my money goes into inventory, and then when the shop does well, it takes care of me. If that thing has a bad month or a bad season, you will go down with it. So you need to build wealth outside of your business or your economic activity. And this is why building it in IRAs, also building a little bit of it in your NAPSA, putting aside your personal savings, creating your own 3-tier retirement system as well. This is why entrepreneurs are some of my biggest clients as well, throughout as well. They've also understood that they've had bad business cycles, and they don't want to be the victims of their bad business cycles. Instead, they want to be able to build up their own stock so that if anything goes bad and their business does go down and it doesn't survive, they have this personal wealth stock that's actually able to take care of them on an ongoing basis. So this is why the self-employed market, not only are we now started to encounter them in terms of capturing them in the tax system through the gig worker tax system, we're also trying to now look at how to develop a retirement portfolio for them as well, so that they can have their retirement income. And they can eventually say, look, if I'm done, I'm done. I've been driving buses for the latter part of 30 years. I don't need to be a 70-year-old, 80-year-old bus driver just to make a living. I can actually finally retire. Or I don't have to now start owning the bus and then putting someone in there and then waiting for them to pay me. Let me have the same kind of retirement benefits that a formerly employed person can also have. So this is also about making sure that you have built your own retirement and your own pension benefits. Now, yes, you're not going to become ultra rich from your retirement account, but you will become comfortable if you are persistent with it. So that's a conversation we should be looking at as well. Thank you for the Pensions Insurance Authority for giving us some of that news as well. The Zambia Empowerment Hub for entrepreneurship yesterday and skills training did call for financial project and business training for the beneficiaries of CDF. This has been actually quite an interesting conversation as well, because we've seen the things that have happened in terms of CDF, be it some people give the money to a Sangoma, and be it some people just maybe misapply the money. we have to make sure that a lot of people are trained adequately to be able to utilize those funds for the best of outcomes. And that's some of our deep dive news. Now, in terms of our global markets, US lenders are expected to exhibit a clean bill of health in the latest stress test on Wednesday, 28th of June 2023 is expected to see the US banking sector stress test. This also follows the failures that have come in Silicon Valley, First Republic, and Silvergate Capital. But there is the expectation that the general banking sector outside of those misnomers is actually going to show a very strong banking sector, especially if you look at financials of companies like JP Morgan. Morgan Stanley maybe did have a little bit of a shake, and Goldman Sachs just had a little bit poor results, but their balance sheets are mostly strong. Now, this is very important because the stronger the balance sheets of the main companies or the main banks, the stronger they're going to be able to participate in things like our bond auctions in order to strengthen our currency and also to strengthen our economic situation. Remember that the flatter the currency, the more FDI comes in, the flatter the more participation offshore, the more the more bank capital gets squeezed into the private sector, and therefore a lot more economic activity starts to happen, job creation, salaries going up, these things, business opportunities, all sorts of things start to spiral together when that happens. So the stress test of the banks is also quite important for Zambia, because that will then show whether we can now have portfolio inflows into our bond market. And new rules aim to clamp down on corporate greenwashing. Companies will face pressure to disclose how climate change affects their business under the new G20 backed rules. It was discovered that 42% of the world's 4,000 companies, top 4,000 companies, do not provide scope 1 or scope 2 data on their carbon emissions. So, in other words, they need to now start getting public companies. Part of these rules will start to demand that public companies also start to report on their green activity. This is also going to be able to make sure that when they are raising green bonds or when they are raising green finance. So this is important for us as a country as well, because we're also trying to look at how to raise green bonds in this country. And we're also trying to get into the green bond space. So it is wise for us to take a look at those rules that will be coming down the pipeline, because they'll affect what people see as a proper green deal, because greenwashing is where people make it look green, but really it isn't. So they're trying to avoid the whole greenwashing scenario where funds which are meant for sustainability and environmental protection are then not going to such places, but someone campaigned as though they were. So they want to make sure that businesses are actually reporting on their carbon emissions while also reporting on how climate change is affecting their business or how they are improving their environment. Other news in the commodity space: Saudi Aramco sees sound oil outlook in second half of the year with China and India demand. Demand for emerging markets led by China and India is set to offset the risks of a recession in the developing world. But the executives of Energy Asia Conference in Kuala Lumpur were divided, while Malaysia State Oil Petronas reports a slowdown in petroleum and petrochemicals demand. So we are seeing that Saudi Aramco, which is the number one oil company in the world, has actually stated that they're seeing that India and Chinese demand will probably be strong in the second half of the year. Strong demand from India and China then communicates that we're probably going to see a slightly higher oil price in the short term. Now, remember, what I've given you as my thesis is the short oil price on the second half of the year. And that brings us down to the end of our news outlook. So I'm going to throw in, before I get into our topic of discussion and our figure it outs and all those things, I'm going to throw in a question to as many of you as possible. And this is to anybody who's watching now. I'd love to see all of you who are in the comment section and all of you who are probably who are listening on radio, should you be. The question is, when you do your monthly groceries, when doing your do you use a written grocery list and stick to it? That's my question of the day. Check it out in the comments. Anybody there, please comment on it and share it with a friend. So the reason I asked that question is that on Ramsey Solutions, 85%, they found that 85% of the millionaire class utilize a grocery list when shopping. They don't just go in there and say, I wonder what I want this month. They have a written list of things, and the majority of them stick to it. They stick to a written grocery list, or they stick to a written budget. It's a way of controlling their spending. Now, Dave Ramsey recently that food is one of the areas. Food and groceries tend to be the areas where we overspend. A lot of our impulses, a lot of our fears are captured in that area. So the question I think I want to ask as many of you as possible. Send us a text. Let's hear you out. Do you use a grocery list when shopping? Okay. Now, let's get into our main topic of discussion today, and that's starting with our figure it out section. The number today is 22.3% of Zambian adults have enough savings or insurance to avoid not going without needed medicine. The others, 77.7% do not have the 77.7% end up having to go without medicine because they either do not have insurance or do not have money. And we've gotten one answer here from our question, and I will go through them later. So please comment the questions, comment your answers to the questions if you can, and I will read them out at the end. Thank you to everyone. And this comes from FinScope 2020. So already we can see that the majority of Zambians in the state of a health emergency cannot manage a health emergency. And that's a very dangerous situation. Now, our chart of the day also does show that as life expectancy grows, this is going to affect women more than men. Women's life expectancy in Zambia is currently 5.4 years higher than men. And by 2050, we're looking at 8 years higher than men. The average woman expected to live up to 79. The average man is going to be expected to live up to 71. This is according to the World Bank and the Washington University Health Institute data, which shows that life expectancy of Zambian men versus Zambian women, and Zambian women have to be very careful with healthcare. So in our topic of discussion today, we are discussing health and health insurance, health risks. Now, if you look at the Fidelity Holistic Wealth Equation, what I have been showing you people for many years, the first part there is your wealth goals, your retirement, your children's college fund. In other words, your health, your harvest, health, higher education, home ownership, and huge purchases. And also even your huge giveaways, by the way, before I forget that, there's charitable giving that you have to think about. Now, in terms of your physical health, that is the number one issue you attention to, because this equation looks at things like social and mental, professional health, and financial fitness. So your financial health, your professional health, and your social/mental health, these are areas that support your ability to enjoy your money. So this is an equation to you being able to enjoy your money. But when you're looking at physical health, you're looking at things like being in shape, eating healthy, not battling chronic illnesses, not dealing with disabilities, and family health as well, and access to fitness and healthcare professionals as well. These are all very critical, important factors to one's health. Now, when they did a survey, this is the Fidelity Millionaire Survey that was done in 2019, they found that 60% of millionaires are worried about health. 60% of them are worried about health. 32% didn't worry about their social and mental health. 30% worried about their financial health. And 27% are worried about their health, are worried about their professional health. But the number one concern of people is their physical health. And take a look at what it breaks down to. They looked at the top 5 concerns of millionaires and aspiring millionaires. And here's what they found. Number 1, weight. People's weight is an issue. Now, you think this is just an American problem. I'm going to show you that this is also becoming a Zambian problem. My health is an issue, while the aspiring millionaires, it's my family's health. So my health and my family's health, then my social health, then finally paying for healthcare. So it's everything that has to do with health. Only social health or my social life is another issue. But weight, family's health, my health, and paying for healthcare are constant fixtures even when people get wealthy to deal with. So remember, the older you get, that is when you're going to probably get your wealth. And by the time you do that, if you're going to do this properly, by the time you do that, you're going to have issues with health that you're going to be battling, because many people make bad decisions in their 20s that metastasize in their 20s and 30s, that then metastasize in their 40s, 50s, 60s, where now they've got to be battling for their life and their health while they've built up all this wealth. So one of the things we always want to do is make sure that we've managed our health correctly. So let's take a look at the things that you are most likely going to be dealing with. Okay. You see, before we were dealing with illnesses that were one-off things. Now, it's not that they're not there. Things like neonatal disorder. These are things that are there, but these are instances. These are communicable things that people were dealing with, communicable, nutritional based. These are treatable things or manageable things, except for HIV. Which is still one of the biggest issues in Zambia. But we're finding that 33% of Zambians, there are 33% less deaths from HIV between 2009 and 2019. We're seeing 11% less neonatal. What other things that are rising? Well, here are the problems. The blue non-communicable lifestyle diseases are the main reasons why people are passing away in Zambia, the biggest causes of death. This is according to the Institute of Health Metrics and Evaluation from Washington University, who then profiled Zambia and found number one fastest growing thing that's causing that the fastest growing cause of death, hypertensive heart disease. Number one fastest growing cause of death, 60% growth in hypertensive heart disease deaths in Zambia over the last decade. The second fastest one is stroke. So stroke and hypertensive heart disease are the two fastest growing methods that people are passing away from. The next one, as you can see, stroke has even jumped from number six, the number 6 killer to the number 3 killer. Hypertensive heart disease has jumped from the number 15 killer to the number 10 killer. These are the things we're battling with and we're going to be battling with in the days when you're trying to now go through your wealth. You've built your wealth stock. These are the illnesses that are probably likely to be lurking around the corners because of the decisions that you're making right now, okay, as people. Asymmetric heart disease is also one of the fastest growing, and cirrhosis, because dopes, people, we love alcohol. That's the problem here, especially guys and especially men. If you're not careful, these are the main things that come for us because we hardly go to the hospital. Women tend to go to the hospital generally more than men. Men go to the hospital when they're dying. Women go to the hospital at least regularly. So these are some of the things you need to be able to start taking care of, because these are going to be some of the biggest costs as you go into the latter part of your life. So this is why health is an important thing. Now, what are the fastest growing things that are causing the fastest growing risk factors that are causing death and disability? Not only death, but death and disability. Now, remember I said, if you recall, the number one thing I showed you here in America is the number one concern of millionaires is their weight. They're worried about their weight, that it's causing issues. Well, let's take a look at the number one thing that's actually causing death and disability, or fastest growing thing that's causing death and disability in Zambia, is obesity. The rising obesity in Zambia, 105% increase in cases of death and disability, rising from number 11 to number 7, is being overweight. Number 2 is high blood pressure. Okay, high blood pressure cases that are causing death and disability have risen by 52.3%, moving from number 7 to number 6. Sugar-related illnesses have gone up by 37 illnesses causing death and disability have risen by 37.2% over the decade that was being looked at, moving from number 10 to number 9. Poor diet has moved up by 35%, moving from number 9 to number 8. Alcohol abuse is still number 5, but also up by 31%. This is also according to the University of Washington Institute of Health Metrics and Evaluation, showing again that the things you're going to be struggling with in your latter days are your chronic illnesses. These are chronic issues. In other words, you are going to be going to the hospital day after day after day after day, needing to access medicine regularly. So one of the things you have to look at, one, obviously, prevention is better than cure. So please look at all these factors. We are all having to look at them. I'm in my 30s. I've had to look at myself and say, hey, if I want to hit 60 good, instead of suffering and being in the hospital line all the time, this is something I don't want to deal with. So remember that healthcare materializing is a low probability activity. Okay, it's not highly probable, but it is a devastating thing if it causes disability or brings you to the brink of death. So it's something that you want to ensure. It's the low risk, high impact quadrant there where we need to transfer this risk. So what are the modes that we look at? because it's not something it's not something that's got a high probability of happening every single day. It is something that's probably going to happen once, and it's going to be a big event, but it's also got a very big impact. Healthcare is a big impact. So remember this, and remember that we need to transfer. So what are your options here when it comes to healthcare? One, accessing healthcare. Health insurance is something that we try to get a hold of. Unfortunately, in Zambia, in as much as the PIA looks at benefits for retirement, we also need to start looking at how to make sure outside of NEMA we can also get people access to health plans, because it appears that health plans have not been that easily accessible for a lot of people who are outside of an employer. Formal employers are the only people who can actually put together good health plans for people, and it's been very difficult to get health plans for individuals and families for people. So hopefully these are things that we can start to develop: healthcare markets where individuals can also acquire good health care, even for those who are self-employed. Because what I'm worried about is that NEMA is going to get packed. It is going to get packed. Okay, we're already seeing queues picking up out of there, and it's no more the fact. And we're already talking about, people are debating on the parliament floors that NEMA should now be extended to people who are vulnerable. They shouldn't be able to pay for it. Well, most of this country is vulnerable, and we're going to go through a system which might end up crumbling because politicians always have to have something to argue about. So it may not be sustainable. So it might be a good idea for you to layer onto your NEMA a personal health care plan. Now, you also need post-retirement health care. There are some providers who do give you options now where you can start saving for the healthcare plan you want in your future. So that when you hit retirement, you are able to liquidate and get a full package health insurance policy that can cover you until your death. The same kind of health insurance that you're getting at work. So if you've got a nice health insurance plan at work, you may want to consider start saving up for post-retirement health care to make sure that you can continue your premium health care plan all the way through. That's something you want to do, but you also want to do some medical savings. Now, there are some emergencies that you may not be able to capture during insurance. You may have certain people, so always have about somewhere towards about 2 months worth of your income. If you can have that saved up in cash, that also helps. As something that you can have as a buffer specifically for health emergencies. That's medical savings that you can also do. So these are things that you need to start looking at in your budget as things you need to handle. And the reality is that these illnesses we are going to start dealing with are no longer once-off things. They are lifestyle things that are going to be entrenched in us, stuck with us. Okay, illnesses you are going to have to manage and deal with. So the need for health insurance is going to get even more and more important, because those healthcare costs will drill through your money. They will drill through your wealth and leave you in some of the worst situations of your life if you're not careful. But more important than that, take care of your health so that we also have minimal costs. So you can also actively work at reducing. You say this is an insurable risk, but you can also actively work at reducing its probability by also looking at nutrition. You can look at also considering expenditures on healthcare, nutrition, your gym membership, your things like that. This is where they become important. And actually utilizing your gym workouts or anything, or your nutrition plans. This is where they become important. You may want to look at even the food we're consuming. We have to be careful, because if we're eating certain things that at the end of the day are going to cost us, then you'll say, oh, but healthy food costs a lot. Sure, but I'm sure blood pressure medication costs way more than healthy food. So that's something you may want to consider down the line. So final thought I want to give today is like, health is like money. We never know its true value until it's lost. That's a quote from Josh Billings. Now, let's take a look at some of our answers from our question today. We've got about two of them. Which we've come. Mundia Joshua Namundia said, we have had a written list for 7 years now. Bang! Those are called millionaire habits right there. Those are millionaire habits. Chisomo Piri says, I don't have a written budget. I will implement it starting this month end. Implement it today, not month end, today. Write it today and implement it. And make sure you put structure around it. Remember yesterday we said training, not trying. Okay? Train, my brother. But well done for acknowledging that. It's a very tough thing to actually say out loud. And to Simwanza said, good morning. I am not consistent in sticking to a shopping list. Trust me, the majority of people are not. But at least if we can take one step and try and be consistent more and more, that is where we can get rid of most of these spending misnomers. So thank you very much to everyone for joining us today on Behind the Markets. We did lose Vernon just a little bit earlier, but we wish you a wonderful day. Michael Wands, I think, just dropped in at the end and says, listing is my household thing. Yes, it's the sticking to it. I also want to make sure. But yes, well done for joining us. Thank you so much to everyone. Wish you all a wonderful day. See you tomorrow.